Like this video, subscribe to the channel and hit that bell notification to be notified anytime we drop a new video. I want to go ahead and start out right. Here, when it comes to market structure, I want to give you the theory behind it and show you first and foremost the most common mistake I see. Here we have market structure trending down. As you can very clearly see, all swing highs and swing lows are gradually getting lower and lower. This is bearish structure. You can see price break structure here, price break structure here. Price is trending bearish. With this structure, you would expect something like this to happen. This is what picture looks like now. The problem with this is what most traders look at market structure like, and all they look at a market structure like, they don't ever look at it from a multidimensional perspective, and that's what price action is. Price action is multidimensional, so in order to actually understand it correctly, we must respect it and give it the understanding that which it is right. So I call this right here order flow. External swing points. The big thing that most traders miss is what we call the trend, this piece of internal structure that so many people so commonly just overlook and quite frankly don't value, but it's only through market structure internally that we're actually able to catch all of the trades we do here at Prosperity Academy. It's our understanding of the fundamentals of the internal that are what literally makes it possible to do what we do. So you can see right now we've established our external swing points, and they are trending to the downside. Inside of these external swing points, it is of course obvious we will have internal swing points, so I'm going to go ahead to you guys right now and mark out our internal swing points. I'm going to change the color to make it easier to identify. We can see that we have a low, a high, lower, low, lower, high, lower, low, higher, high, higher, low, higher, high, higher, low, higher, high, lower, low, lower, high, lower, low, lower, high, lower, low, higher, high, higher, low, higher, high, higher, low, higher, high, higher, low, higher, high, lower, low, lower, high, lower, low, lower, high, lower, low, lower, high, and lower, low. What do you notice? When I mark out those structure points, we know that the order flow is bearish. Yet somehow there was some bullish and bearish examples of internal structure. How was that possible? Well, you have to understand that every time the market pulls back from an order flow perspective, the internal structure is going to shift, and that is what is called a pullback confirmation. When price is trending downwards, as you can see here, and then shifts and had a breaker structure up, but the order flow is still bearish, we know that the order flow is pulling back, so you can see price pulls up higher, low, higher, high, higher, low, higher, high, until again at some point, usually partnered with an order block from a level of supply. Let's just say this is an order block right here from a level of supply that's also, by the way, in the premium level of price action, the top 75 of the price length. That's when we can look for our realignment. Realignment looks like this. When the internal structure was bullish and then has a breaker structure to the downside. Now the internal structure is bearish. That is when we know now that we've had a confirmation that this low down here is about to be broken, and as you can see it does. Price continues to break until at some point price will put in an order flow lower low and then an internal higher high again. So the internal and external are both on different structures, one's bullish and one's bearish. If that's the case, then we know the external structure is coming for its pullback. Internal breakage up, internal breaker structure up, internal breaker structure up, internal breaker structure down, and that again is our confirmation that this order flow leg down here is about to be broken. Now when that happens from an area of supply like we just spoke about in the premium level of the swing high to the swing low top 75, that is where from an order block internally we get into our trades. So not without understanding both structures can we actually get into a trade, and actually it's the internal structure that enables us to make this a 1 to 5, because what the problem is, most traders when they're trading their idea of structure, and it's like this, when price pulls back, they'll just enter the market anywhere that they think is reasonable, whether it be down here with their stops above here, targeting the low to try and trade structure, or whether it be up here. Sometimes it might be too tight and they might miss out, and then price goes, and sometimes it might just be too low, 50% 1-to-1's right. That's not what we're trying to go for. By understanding the multidimensional version of structure, it enables us to get that additional extra confirmation and accuracy with our analysis, which makes our win ratio higher and our risk to reward significantly higher. So now we've explained this theoretically, let's go ahead into the price action chart and show you how this actually works in real market conditions. Let's just go ahead and pull price back to, let's say here, okay. So we're starting out right here, as you can very clearly see on the 4-hour time frame now instantly. What do you notice if I just pull price like this? If this is the picture you get, what do you see? First and foremost, you have to identify your swing points of market structure. So we want to take our swing high, swing low, swing high, swing low, and the new swing high. What do you guys notice? You notice that the order flow is bearish, right? It's making lower lows, lower highs, lower lows, lower highs. So wherever you expecting price to go, if you've got this image in front of you, well, you're expecting it to go anywhere below here. Okay, great. So our expectational order flow is bearish. We're expecting price to go lower. Great. So the current swing high and the current swing low are what we need to use to understand our premium and discount tool. Anything above this blue line, which is the 75, that's the 7.6 at the moment. Anything 75 and above is considered premium, so we want to be selling from areas of premium, but not without our confirmation again, like we just said. We need to understand the internal structure, so we know that the order flow is bearish. We've just established that it's trending down order flow. It's also established that we're expecting this load right down here to be broken. Now, we need to understand the internal structure, because as we can see, if we just pull out our rotated triangle, and we do this, let's zoom into this price lag right here. Let's do this, let's zoom into this price, like right here, and understand what happens when it pulls all the way up, because we know that order flow is bearish. But interestingly enough, when we go to the 1-hour time frame, what do we see? Let's go ahead and remove this now, because you know this is this low to this high, is what we're looking at. You can clearly see. If you mark out the internal structure, what do you see to the internal high? I mean, you could call this the internal high also, but for this, we're going to call this the internal high that caused this low right here, because it was so dramatic. There wasn't a 50 pullback. This could consider it, but let's use this. This is our internal high that put in the internal low that gets broken here, so that is our break of structure confirmation to the upside. So now we have bearish order flow, but bullish internal structure, and then we have higher high, higher low, and higher high. So you can see that the internal structure at this moment in time is still bullish. So until this low right here gets broken, because this is our current low that put in the current high internally, until this low gets broken, we're still internal bullish and external bearish. We need both of the internal and the external to be in one direction, so we can execute our trade. So just playing out price, there is our break of structure, exactly what we was waiting for. Let's confirm it. Confirmed when the candle breaks below. So now we've had a break of structure. Now we can look again internally, as we understand, have high low price, pulls back, new low. Okay, great. So it's going to be, our entry is going to be somewhere from this high to this low. Why? Because this is the high that put in this low that broke structure. So this is the most important thing. Okay, we can see right now instantly that the origin of this level right here is still partially unmitigated. Well, it's fully unmitigated. You can see the buy to sell this green, and then the momentum comes in. The buy to sell is what we use as our order block. That's where we will be placing our short position, where our stop loss just above targeting. We're targeting our weak low right here, right? Because we already know that order flow is bearish. Now the internal is bearish. Now we know where price is going. We need to make sure that we get in with it. Then we can just play price and see kind of how this plays out. Price comes up, tags us into our entry, and instantly starts moving to the downside, which is what you want to see. You want to see selling pressure out of your zone, essentially great momentum down. Price then has what an internal breaker structure, so at this point you can move your stop loss to break even, so it's impossible now to lose from this trade. And then essentially you just patient, you just have the ability to wait to find out where a price hits, take profit or not. And that is essentially how to use market structure and order flow, using exactly what you've been taught in this video. If you guys are interested in our premium education services that will never be revealed on YouTube, go ahead and check out the description box down below. You'll be able to get access to our premium content there. I'll see you guys in the next one.